Come on. Oh, no, I didn't want to do that. I want to do this. I want to do this. And, oh, there we go. Right there. There we go. There we go. There we go. There we go. And we should be live any second. There it is. That one should be turning on very shortly. Alexandra, good evening. Calvin Hill, ooh, who's here? Penny, good evening, Penny. RJ, good evening. M.I. River Guy, Too Tall, cool. A. Hanson, Calvin Hill, Alexander, Marin, Michael, Sophia, Big Pop, Big Papa, ooh, gotta love Big Papa. Needles Mix, Alan Cass, Stanner, good evening, one and all. See, this one's on yet? Nope, not on yet. All right, so let's get the ball rolling. We are missing one camera. I guess we'll get over that one. But that being said, let's see what we can do today. All righty. CG, what's going on? Alan Cass, I saw that already. Sophia, how you doing, Sophia? Ooh, I stopped it. Oh, Big Papa. K-Van, is that right? K-Van's in the house. How you feeling? I'm feeling wonderful. Pitalina, Calvin Hill, Wanderer. Victor Rothschild. Jay Rothschild, Armco. Alan, good evening, James. Hope you're feeling much. Oh, yes, I am. That was horrible last night. You know, Mother Nature just called and say, hey, come take care of this. Still waiting for that one to turn on. Kerith D, what's going on? Zach Ahmad, all right. Ollie, Alan, good evening. Okay. Ezek Wee, all right, interesting name. Mark, how's it going? Odom, what's going on? D-Dam, C.A. Smith, what is happening? C.A. Smith. Gotta love it. Gotta just sign. Got one more camera to turn on, and that is for Twitter. Gotta have us some Twitter going on, X, whatever you want to call it. I'm not that big of a fan of, change. I'm sure you guys know that already. You gotta be kidding me. Come on. There it is. Almost got it. And there we go. Camera number 6. 6 cameras ready to go. Oh, people hit. Dylan, how's it going there, Dylan? Do you always roll same strike, or when do you roll up? Always going to be a numbers game, Dylan. Always. What did I buy it for? What strike price did I sell? Where is it at now? Where does it look like it's going? What is the best play for me to do now? Spanky, Raymond, Fries, what's going on? Dwayne, what's on? Lakeside, interesting name of Lakeside. Tony, Krisha, good evening. Ojan, Core, PDX guy, cool. On the move. Bizen, what's going on? Elaine Laperriere, ooh. All right, Mike, Stefan, Ski Skaka, interesting name. Mike, PACB, what is that? Chad, what's going on? John, George. Okay, we're going to do something a little bit different tonight. The reason I say we're doing something a little bit different tonight, I got to stop this. All right, we're going to stop. Okay, I'm going to keep that going. Video. Let's do the video over again. Delete. Yep. And let's add the video one more time. A video right there. Okay, and that one, and okay, and here we go. Almost ready. Takes a little bit. Yeah, you don't need to see all of me. All of me. Why not take all of me? Okay, and there we go. And there it is. And I think we are good. All right. All right. So we're recording, we're broadcasting, got 6 cameras going. Yay! Alrighty, alrighty, alrighty. Dupec, Sylvie, Bandit, what's going on? 170, wait a minute, 1975 CC, good. Moriano, Fredo, what's going on? Thoughts on PSEC? All right, Doug, how you doing? Fredmo, gotta love that name. All right, so let's take a look at HI. Why not? Isn't that like Hawaiian Electric? And it's going to be a no. The only reason it's going to be a no, what do we have here? Mark, hey Mark, made it on time. There you go, way to go. So HI is Hawaiian Electric. No, it isn't. It's Hillenbrand. That's a no. Is it HII? HII. Huntington. That's a no also. Oh, HII. Okay, H3Is. 1, 2, 3. Hudson Detective. Yeah, no, that's going to be a no also. All right, do you always roll? I got that question. I was walking through a graveyard the other day. All right. Buddy, what's going on? Michael, Delaney, Rye, Neil. What's this channel about? Stocks and stuff? Fister, it's about investing in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. That's over 50% per year. That's a lot. Well, for me it is anyway. It's a nice amount. Am I the only one here? Well, Connor, you're on YouTube channel number 3. Okay, so I got 3 YouTube channels, and this is the newest one, and I haven't even advertised it yet. So you're here by a fluke. Okay, so there's probably not a lot of information about me on the channel you're on at this moment because it was a phone just laying around. So I put on YouTube and I press go, and there you are. Okay, so I got 6 other cameras going, so 6 other channels, and then I have 3 channels on that, so it's 9 channels altogether, and you're on that one. All right, Bacon, WSP, how are you? I am wonderful, thank you. All righty, John, PE is over 30, and the S&P 500 market going to crash soon. Buy gold. Okay, John, I'm going to disagree with you because there's something going on in the background that you don't know. I saw a video today, and it's like, uh-oh. That's some cool shit what they got working on there. So I wouldn't do it if I were you. But, you know, who am I to say? Business Acquisition Club, how are you today? Pam, Mark 21. Make Money Online free guide. How are you today? Jaimez, what's a good dividend to invest 10,000 in? Okay, Jaimez, I know nothing about you. I cannot give you any advice unless you want to have a conversation. Okay, DM me your number. I'll call you. I'll give you a buzz. And I will chat with you and kind of see what it is you're looking for and if this is even something that you're going to be okay with. Because number one, it's slow as hell, boring as hell. It is monotonous. It's the same stocks over and over and over again. And the profit is crappy. We're only looking for 1% a week. That's only 50% a year. I'm not quite sure if that's going to work for you. Mike Sweeney, do you sell options? Yes, I do. The Spotter, but of course. Alan, full 100. All right, cool. So we're going to do something a little bit different today. James, can you tell us those news in the background you heard about tomorrow, please? No, I don't do politics. So it was a political thing. And what I heard, also a financial thing. What I heard is like, holy cow, that's going to be freaking awesome if he can pull it off. I was like, you know, so I'm not 100% sure if it's even true or accurate because you really can't trust anything online anymore. So just because I saw a video and everything looked good and the person who I saw delivering it, well, I respect immensely because I've been following him for years. I'm wheeling with 275. Is that too much? The Spotter, I'm not 100% sure. Because I don't know what your goal is. So my goal is 1% a week. So 1% of 275 would be right around $2,800 a week. So I'm not quite sure if that's what you're getting. If you're not, just hang out. What do I think of Peter Schiff? I have no idea who Peter Schiff is. What's a good? Okay, we already talked about that. Hilmez, thank you, Hilmez. Bishop, thank you for that. Thank you for that. Bacon Eater, I am fine, thank you. A little bit curious there. Hello, Giza from across the pond. What you on about, mate? Well, bloody jolly good there, laddie. We're going to go toss off a couple others and wank off. Did I get it right? I don't know. So off, you bloody wanker. Got a friend of mine, she says that to me all the time. Would you rather gain muscle or gain eagers? What is eagers? I have no idea what an eager is. Can you give me a clue to what this is about? Oh, Campinator. Okay, simply, very simply, I'm going to show you how I invest in dividend stocks for a safe, simple, predictable, consistent 1% per week. That's over 50% per year, using nothing but pre-qualified dividend stocks. Now, a pre-qualified dividend stocks, in my humble opinion, is any company that has consistently been profitable and has increased its dividend payments to its shareholders every single year, increasing every single year for a minimum of 2 decades. That's 20 years. So the stock market's been around for over 400 years. So I'm only looking for companies that are consistently profitable for 20 years. There's about 300 of them. So it gives me something to look at every single week. Now, I can't afford to buy all 300 every single week. So I do buy 1, 2, 3, a dozen, maybe something like that. Who is your biggest mentor? Dalio, Buffett, etc. Oh, no. That would be Wade Cook. Simple, right to the point, didn't sugarcoat anything, and it didn't put a lot of fluff in it. The book was very short, very sweet, right to the point. It's like, oh, I get this. This is easy. What trading platform do you use? I use Thinkorswim, which is offered through Charles Schwab. So as I was saying, tonight we're going to do something a little bit different, all right? So we're not going to be taking a look at the stocks that you want to look at. And the reason that is, do you remember every night me saying, hey, I like that one, I'm going to write it down? Well, the list that I've been writing down for the past couple of weeks, I'm going to do those tonight. We're just going to breeze through them really quick and see how quick you can see it's a yes or no. How long have you been doing this? About 30 years. But here, live, I've only been doing it for 2.5 years. Okay, so 2.5 years live, standing in front of the camera saying, hi, everybody. That's about it. But actually investing in dividend stocks and sharing my trades. My very first blog post was in August 2011. So I've been posting consistently since 2011, all the trades that I've been doing. But it was 2.5 years ago. Somebody took the camera and said, smile, say something. And it was easy. It was so easy. You just pick up the phone, just go, hey, everybody, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. Have I got something for you today? It was easy. That's all there is to it. Pick up the phone and say, hey, everybody, this is James. Whatever. And then all of a sudden, there's like thousands upon thousands of people want to hear what I have to say. And I'm thinking to myself, what the hell's the matter with you people? I'm a nobody. Okay? I'm making these videos for my children and my grandchildren. Yeah, granted, I get 50% a year. Okay, great. And it's a simple, easy strategy that anyone can do. So you want to find out? Fine. Hang out, chill, ask as many questions as you like. Terpy T, how do you receive 50% per year in dividends when the companies usually offer 2 to 6%? Okay, you don't understand. Well, here's the thing. You're new here. I mean, you're brand new here. I remember that name. I'm really good with names. So when people show up, like Peter Griffin, he's been here before. John Blunt, he's relatively new. Alex has been here for a while. Samuel Ponce, I'm not 100% sure how long he's been here. But Blue Fox, he's relatively new. Jen Pinka, he's been here for a while. Who else we've been here for a while? Kay Van, he's been here for a couple of months. Jaimez, he's new. Who else we got? The Spotter, he's relatively new. Fredo, he's been here for a while. Who else? 1975cc, he's been a Journey Fan, relatively new. Bandit, relatively new. Wow, a lot of you guys are relatively new here. But anyway, yeah, I've been doing this for a while. Okay, so I stand here. You guys let me know what stocks you like. So I'm looking for a simple, safe, predictable, consistent 1% per week. Now, you know I have no idea who I am. So this is the first time you've been here. Great, welcome. Thank you. Thank you for stopping by. Thank you for, what do you call it? Participating in the conversation. So what I usually do, no, we're not going to do PayPal because it's not on the list, but what we're going to do is we're going to take a list of all the stocks that I came up with over the week. I get 1% a month with my bank, so 1% a week is better. I think 1% a week is better. Just sit and chill. So we're going to go over the list that we have accumulated over the last couple of weeks. Because every time we see a stock that looks good, we say, hold on, that's going to look really good in about 2 weeks. That's the list we're going over tonight, just to see how many we can come up with. Just listen and observe. There you go. I've been here for a long time. Campinator. I don't know. I'd remember that name, Campinator. And I'm pretty good with names. See, Alex has been here for a while. I know that one. Siskaka, what have you learned from being 20 years in trading to know 30? Okay, hold on. No. See, I've been trading for, let me think. What year? You like that one? What year is it? What year is this? Okay, I'll give you for instance, okay? When I first started trading, you guys can check this up. When I first started trading, commissions to buy and sell stocks was $250 to buy a stock. That's the commission. Okay, that was back in, I believe, in the 90s. Yeah, back in the 90s. Okay, that's what it was. I remember when it went from $250 for the commissions, and then it dropped it down to $125. And then they dropped it down to 110, then to 95, then to 75, then to 59. Then from 59 it went to 35. Then from 35 it went to 17. Now it's just about free. There's some companies that still charge a commission. Okay, fine. But that's as far as I remember back. So when I first started trading, you really had to be right, because to get in and out, it's $250 per trade. It's like, holy cow. Anyway, so let's get going. Let's see what's going on. And if you have any questions, just ask. I'm going to try not to do any stocks tonight that you guys suggest. We're going to take a look at the ones that we've been looking at for the past couple of weeks and say, oh, that looks good. First on the list tonight is going to be Harley-Davidson. Now, what we're going to do as quick as we possibly can. It's going to be a no for next week. Where are we going? Quickly, okay? We're going to see how fast we can go through these to give you an idea of how much time and research do you really need to do this. Do you use more investor mentality or trader mentality? Okay, John, you're relatively new here. Chill, hang out, and just see how it works. It's going to be A, B, C, 1, 2, 3. It's always, for me, it's always a system, you know. A plus, is that who I think it is? Mary June. I haven't seen you in a couple of weeks. How you been? All right. So what we're going to do is take a look at stocks that we looked at a couple of weeks ago and say, hey, that ought to look great in 2 weeks. So let's see what they look like. Now, for those guys that are new, the trading strategy I'm about to show you. Now, ask as many questions as you want. I can't get to all of them because we got 9 cameras going. Sorry, 6 cameras going, which means I have 6 screens I have to take care of. So I might not get to yours as quickly as you want me to. But here's the thing. In 2008, my 9-year-old daughter asks me, Daddy, what are you doing? In 2008, my 9-year-old asked me, what are you doing? Can you teach me? This is how the whole thing started. This journey started in 2008 when my daughter said, can you teach me? Great. So how do you teach a 9-year, not, I need 2 hints for this one. How do you teach a 9-year-old how to invest in the stock market when most adults can't figure it out? Gavin, James, I just put my whole life savings into Lockheed Martin options. Okay, I'd like to know why you're thinking that, but alrighty then. But here we go. So at 9 years old, she said, Daddy, can you teach me? So for a 9-year-old, it has to be simple, safe, predictable, consistent, and no way for her to lose. June, can we take a peek at ADM? Archer Daniel Midland. We'll have to take a look at that a little bit later. We got something we already have a plan for tonight. Okay. So simple, safe, predictable, consistent, no way for her to lose. So in order for her to come up with a trading strategy, I had 5 rules, and they're very simple rules. Okay, rule number 1, never buy something that's not on the list. Yep, CDR Disney's on the list. Number 2, never sell at a loss. It defeats the purpose. Number 3, make sure the company is consistently profitable. Rule 4, weekly options only. And rule 5, make sure all the numbers work. Okay, so when I am trading, when I created this for my 9-year-old daughter, I wanted as many odds and probabilities in her favor so that she didn't lose her money and then she didn't cry. Because if she cries, I'm going to feel bad. All right, if my little daughter, 9 years old, is crying because I taught her something and it didn't go right and she's losing her money and she's going to have to cry, I'm going to feel terrible. But wait, it gets worse. If that happens, guess who gets involved? Mama gets involved. I'm sleeping on the couch, and we know that's never a good thing. No matter how comfortable the couch is, it's never a good sign when dad is sleeping on the couch. So, simple, safe, predictable, consistent, no way for her to lose. 5 rules. Never buy something you don't want to own or hold on to for the rest of your life. Number 2, never sell for a loss. Make sure the company's consistently profitable, weekly options, and then make sure the numbers work. So, like a good movie, everything is going to come together before the night is over. I'm actually going to walk you through a few trades so you can see exactly how it works. And for those who don't believe 1% a week is possible, maybe this will open up your eyes and say, wait a second, it just might be possible. Because, well, it is. I've been doing it for a while, so, it is possible. But you'll open your eyes. That never comes. She may have enough time to run after money. I have no idea what that means. She must be enjoying childhood. 9-year-old shouldn't be caring for such things. Drink that after Ethan. Okay, so here's the thing. Okay? When I created it for because see, you're missing something extremely important. Okay, number 1, she asked for me to teach her. That's number 1. Number 2, I know you can't keep the attention of a 9-year-old that long. So it is a 10-minute strategy. So every single video you ever heard me do said, hey, everybody, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. So my 9-year-old daughter was the 10-minute trader. So the trading strategy was for her to do within 10 minutes every day. So 10 minutes every day, well, that's less than an hour a week. So 1%, an hour a week, whatever your percentage is, whatever you have, you figure it out. It's lovely. Sorry, so let's get going. First one we're going to look at is Harley-Davidson, and it's always by the numbers. The very first thing we want to look at is the 1-year chart. Looking for 5 things, and it's very easy to spot. You should get them within 3 to 4 seconds. Are you ready? The high, the low, where was it, where is it, what is it doing? Okay, it's coming down at the moment, so we're going to say not this week, but maybe next week, because look at this. You got your 30-day bottom, shoots up to a 30-day top. Now she's coming back down. We call this bottom fishing because it's looking for a new bottom, and then it turns around and goes back up again because that's what stocks do. If you didn't know, check it out. They do 2 things and 2 things only. They go down, they go up. 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 That's it. They don't come to your house, take the dog for a walk. They don't make dinner. They don't get outside in that grill and flip you a nice burger. No, they don't. They go up, they go down. That's it. That's all. Sorry. That's all they do. They go up and they go down. So when it's at a 30-day bottom, we investors say, hey, that's a good deal. Let me buy some. And then the stock goes up, 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 up. And then we say, hold on a second. From 26 to 31, that's $5. Well, $5 on a $26 stock is just a tiny bit below 10%. Or is that? No, 20%. Okay, so 26 and 26 would be 32, and it jumped up to 31, just a little bit below 2%. Well, no, sorry, 20%. Sorry. So this, 20%, just about. Okay, so when it jumps up that much, people like me and some of you in the audience say, oh, this thing just jumped up 20%. I'm taking my profits. And then one person takes a profit, and then another, and then another. Then what happens? The stock drops. Well, that's what happens. You can call it whatever you want. You can call it retracement. You can call it correction. You can call it, downturn. You can call it whatever you want to call it. But facts are facts, and you can't get away from it. If this is 30 days from here to here, this is the high, that's the 30-day high. This is the low, that's the 30-day bottom. It is what it is. As long as we can agree on fact, I love facts, I do. Okay, if we can agree on the facts, here's the bottom, here's the top, now she's coming back down again. Great, it's going to make this so much easier. On a level playing field, we all agree. The top, the bottom, there's go. Okay, so I'm going to say no for this week, but I am going to put it on the list for next week because this is going to find a bottom sooner or later. And when it does, I want to be there. So when she turns around and goes back up again, well, I want to see what the numbers look like so I can take advantage of it. So Harley-Davidson is going down for next week. Not next week, but the week after. Okay, that's Harley. Ooh, next one, Verizon. What's Verizon doing? Okay, 3 to 4 seconds. You ready? High, low, where was it? Where is it? Down, up, down, sideways. We're right here at 43.35. Okay, now that doesn't look that bad. Next step, after looking at the 1-year chart, is looking at the numbers. 43.35 to 43.50 is going for 34 cents. Damn it. That's not 1%. As much as I like Verizon, I'm going to say no. Sorry. That's me, though. You like it, you do it. MCD, Mickey D's. Interesting, same thing. High, low, where was it? Where is it? Down, up, down, up, down, up. Look at this, it's going down, down, it's going back up again. Well, let's zoom into that, see what that looks like. Oh, yeah. Oh, yeah, 30-day high, 30-day bottom. Now she's going up. What happened today? What happened? I don't know. See, if you guys think I sit in front of the computer all day to figure out why that happened, no, I don't. I just turned my computer on about 15 minutes ago before I turned the cameras on. I don't sit in front of my computer. This is a hobby. This is not a profession. Okay, I'm on for about an hour or two in the morning because I got a trading group and we all trade together because we're all looking for the same thing. And then at night, I'm here sharing information for free. I'm not going to ask you for your phone number. I'm not going to ask you for your email. I'm not going to ask you for anything. Unless, of course, you want to have a conversation. Personal call. Now, I'm old school. I don't know if you noticed the gray hair. I'm 61. That means I grew up in the 60s and 70s. So, yeah, I don't do this email, this Zoom, this what do you call it? I don't do any of that. You want to have a conversation, send me a phone number. I will pick up the phone and I'll personally call you myself. And I will guarantee you one thing. I will not try to sell you anything. I just want to have the conversation. Because I want to be able to pass on the information that I have up here before the next journey. Because I have no idea what the next journey is, and I have no idea when it's going to start. It could be tomorrow, it could be a couple of weeks from now, it could be 30 years from now. But it's coming. So what I have up here, I want to relay to my children and my grandchildren. So they have a video, a whole bunch of videos that they can watch and see how did Papa G do it. So hopefully this will be for them. Marky B, what's going on? All right, so Mickey D's, I'd like to find out what's going on here first, but it looks like a possibility if this is the bottom and it is going back up. This could be just a fluke. We don't know. We won't know until we see what happens on Friday. Is it going to continue going up, or is this a mark of it going down? Because see, top's here, now she's going down. So we had 4 days going this way. No reason why we can't go back down. But tomorrow will give me a better idea. I would have preferred if it was 1, 2, 3, 4, 5 green was like this. 1, 2, 3, 4, 5. See? Green, green, red, up. But it's there. And it looks good. And what is Mickey D's offering? 300, 302, going for 325. That's over 1%. That looks good. All right. So I'm going to put a little star next to that one because that one looks good. Next, we have Dow, D-O-W. Interesting. Okay. High, low, where was it? Where is it? All right, now it's going down right here. So we're going to say no to Dow, but we'll put Dow on the list for next week because if you can see this right here, okay, 30 days ago, shoots up, down, up. Here's the high right there. Here's the bottom. Looking for a new bottom. That's what we're doing right now with Dow. So Dow may be a great opportunity for Monday or Tuesday of next week, depending, of course, what happens tomorrow. What is going to happen? We don't know. Dow is off the list. All right, K-Van, we'll have to remember. Oh, my God. Is that 2 nights in a row? Austin is here before 9? Is it? Nope. It's after 9. All right. I am already looking forward to learn more of you in the future. I am from Norway, by the way. Outstanding. I don't know how to say hi, hello, or anything in Norwegian, so just hi, hello. How you doing? But, yeah, Norway. Cool. Well, we got someone from Vietnam. We got someone from Brazil. Someone from China. Someone from Japan. Who else? Hakuna Matata. He's from Sweden, isn't he? Or was it Switzerland? He always gives me a hard time when I forget. I sold covered call for the first time after watching your videos. Tiger Twin. Cool beans. How did it go for you? Adam, Jennifer Drexel, how are you? Becky, good evening, Miss Becky. Melvin, hi, good evening from Dominican Republic. Cool beans. You're right. Every day I pick up new information each day. Cool. Well, that's why we're here. No, Big Brain, I ain't falling for it. Now, Big Brain comes 2 or 3 times a week, and he always asks the same thing about Enbridge. He does. Always ask about Enbridge, and I always say no. Okay? ENB. See, right there. Enbridge is on all-time high, so hell no. Number 2, monthlies. See, Big Brain likes to ignore rule number 4, which is weeklies only. Okay, I do have to admit, he is persistent, though, because he does. He shows up every week, sometimes 2, 3 times a week, and he always asks me about Enbridge. And every single time, I said no. Okay, he keeps trying to sneak it in as if one of these days I'm going to say yes. No, brother, no. All right. Good evening, Dominican Republic. Yep. You missed big year. I see what you're looking at. I do. And it's working for you. And that's great for you. But for me, it's no. Okay? Now, I did very well this year. I think I'm up 65% one account, 47 in another. But I am perfectly fine. Right where I am. I like to stay in my lane. See, I'm at that point in my life where if it ain't broke, don't fix it. If it's working fine, leave it alone. That's my mentality because that's the way I grew up. Okay, I was born in the 60s, raised in the 70s and 80s. If it's not broke, leave it alone. And see, I don't know how many times I got to tell you, Big Brain. I'm perfectly happy at 50% per year. Perfectly happy. SPY, hell no. Yep. Why I keep Enbridge and collect dividends. Yeah, I get it. You know, you like Big Brain. You like Enbridge. I don't. Okay? See, I like to collect 50% per year. Now, let me think for a second. Hold that thought for 1 second. Big Brain, you want to see something interesting? 1 year ago, Enbridge is at $40. Okay? Enbridge. $40 1 year ago. It looks good here, but it's at 50. So from $40 to $50 is only 25% increase. So if you bought it a year ago at $40 and right now it's at 50, you made 25% plus whatever dividends you collected. Now, I don't know why you think 25% is better than 50%. I don't know, but I like 50%. I know, you just bought it and you just held on to it and it just did. But no, I had to work at mine. I get the MSTR, hell no. Okay, who's that? Taluk Ard. Okay, Taluk Ard, do me a favor. Okay, I'm going to watch for you to tell me, because I'm watching the screens right here in front of me. So what I want you to do is I want you to go to whatever financial website you use, take a look at historical performance for MSTR and see how many years consecutively have they increased their dividend payments to their shareholders. Okay, Jed, we're not going to look at anything. We have a list that we're going to look at today. I don't see you 50. You see my 25. Oh, you don't see my 50. Okay, hold on a second. Hold on a second. Hold on one second, big brain. Like you watch me every couple of weeks. You do. All right. All right, you ready, big brain? Now, I haven't calculated last week's or this week's, all right? But account number 1, 58.6. Account number 2, 46.3. Account number 3, 63.3. Okay, you'll want to check them. Here they all are right there. Pick any one right there. Look at this one right here. Okay, Kohl's, Riot, Hertz, Devon Energy, Macy's. Hey, here's all the profits right there. You can add them up yourself. Or you can go right here. Where is it? Right there. Oh, look at that. I didn't get 1%. Okay, 0.98. All right, whatever that was. It's only 0.98. It wasn't quite 1% that week. Oh, here's one. 2.04. Riot, Harley-Davidson, Hertz, Devon Energy, Kohl's, Macy's, Devon, and Riot again. They're all there. You want to go check them out, be my guest. You simply enjoy your 1%, good sir. Thank you very much. 1% a week is not bad. I mean, I'm perfectly okay with it. And no matter how, you come back every single week. I'm going to tell you the exact same thing every single week. I don't like Enbridge because it doesn't have weekly options. John, do you sometimes trade funds like sector trading if you're bullish in the sector? No. Okay, see, you're new here, so you think you know what I'm doing, but you don't. Let me just show you something. Let's get rid of this. Okay, let's get rid of this. Let's do this right there. And there we go, and there you go. Okay, so John Blund, you ready? This behind me here, Mr. John, is what's called an EX dividend calendar. Now, why do I use the EX dividend calendar? Because I want to know when a stock is going to pay its dividend. Because the stocks that I like, let's change this for a second. Here we go. Take a look at this. What do we have? Medtronics, Fortis, Cardinal Health, Nucor, Illinois Toolworks, Ben Franklin, Cincinnati Financial, T. Rowe Price, Coca-Cola, Pepsi. We heard most of these. Each one of these little green dots up here represents a company that has consistently increased its profits to its shareholders. That's what I'm looking for, cash flow. I'm not looking for capital appreciation. Okay, you're an Enbridge. You're looking for capital appreciation. There's nothing wrong with that whatsoever. I'm looking for cash flow. Big difference, total different strategy, different mindset, a different outcome. I'm looking for cash flow. You're looking for your account to grow, 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 grow. Well, a growing account doesn't pay my bills. Cash flow pays my bills. So when you're retired, you've got two choices and only two. Number one, you learn to invest yourself for whatever you're trying to get, or you hand it over to someone else and you take whatever they give you. Now, I'm pretty sure that I've talked to a lot of money managers and fund managers. They don't all have your personal best interest in mind when they're trading your money. Nobody has as much money, wait a minute, nobody has as much interest in your money than you. So two choices, do it yourself or have someone else do it for you. Simple. Joe Mary, MU, Micron. We'll take a look at it in a little bit, but let's get back to our list. So as I was saying, the reason why I use a calendar, I don't do sectors. The way I do my investing is who is paying a dividend this week. Okay, what do we have? McDonald's. Okay, that's food. We all know who McDonald's is. O Realty, Stanley Black & Decker, Ben Franklin, Lennar, Kimberly-Clark, Pepsi. I have no idea. Oh, GPC, Genuine Parts. They're not all in the same sector, but they're all paying their dividend in the same week. That's my interest. Because when a company's getting ready to pay a dividend, the stock has a tendency to go up in value. It's got nothing to do with the sector whatsoever. Just because the travel sector is up, well, these companies are going up based on the calendar, not on the sector. So that's how I do my trading. Okay, so let's get out of this, get back to where we were. We're going to get back to where you once belong. Let's go. Okay, so that was Dow. Intel is next. INTC. Let's try that one more time. INTC. Hell no. That was a quick one, wasn't it? Well, because the reason being, look at the high. That was today. Okay, the bottom. Where was it? Where is it? Okay. Sideways, shoot up like a rocket. No, I don't ever buy anything at the high. So no. But I will put Intel down for 2 weeks from today because that profit is going to come back down. And this gap right here is going to fill eventually. Well, gaps always fill eventually. So this is going to come back down. That gap will fill. Find a new bottom, turn around. Maybe a week, maybe 2, maybe 3. We don't know. But not this week, not next week, but maybe the week after. Oh, here we go. INTC. INTC. All right, that works. Next on the list. Ooh, here's a good one. TXN. Texas Instruments. TXN. Now, we found this one last week. Yeah, it looks pretty good. We found this one last week. I even bought some last week. So let's take a look. High, low. Where was it? Where is it? Up, down, up, down, up, down, up, down, up. Now she's going back up again. Okay, so here's the top here. She comes down. Now she's going back up. 182. The 182 is going for $3. That's more than 1.5% for 1 week. So I'm looking for 1%, but this is offering me over 1.5%. All right, next. Hope you guys are writing some of these down because when I'm done looking at these lists, we'll take a little deeper dive and we'll actually do a couple of trades. MU. All right. It's not call a rug pull. They can change it on you anytime. I'm not quite sure what he's talking about. They can change what on me anytime? No idea. All right, that was Texas Instruments. Next one, HPQ, Hewlett Packard, coal beans. No, not this week, but next week maybe, because look, top, bottom, side down, up, down, right here. It's dropping. Here's the top right here. Now she's dropping. We're going to be looking for a new bottom in a couple of weeks. Okay, here's the bottom there. Okay. See, here's your 30-day bottom. Shoots up. Here's your top. Now we're back down to here after a gap down. So how far down is it going to go? I'm going to put Hewlett Packard down for next week. Altria. M-O, Altria. Try this one more time. There we go. Ooh, interesting. See that? Let's zoom in a little closer. See if you see it. What do you think? 30-day top, 30-day bottom, 3 days. 1, 2, 3. Here you go, right there. Perfect opportunity to jump in tomorrow morning, if you like it, of course. However, 65.19, the 65s are going for 82. Well, that's over 1%, right? So why not? If you like Altria, of course. Lord No Face, hey, dude, I tried calling you today. Went right to answering machine. It's okay. Next is those 30-day charts.
What was the ticker on the last one?
That's a good question. Hold on a second. Hewlett Packard.
Hewlett Packard. Okay.
Okay, somebody wants to take a look at MU. All right. No to MU, Micron. Look at Micron. Here's the top, here's the bottom, sideways, down, up, down, up, down. So it's a high of the year right here. Now it's coming back down again. So no. No for Micron. Sorry. Next. TSLL. That's a neat one. TSLL. High, low, where was it? Where is it? Up, down, up, sideways, up, down. See, bottom was here, she shot up, now she's pulling back down again. So when it comes time for profit taking, okay, here's your bottom here, shoots up, now she's coming back down again. Not quite the right time to get into TSLL, but in 2 weeks maybe. So let's put it down for 2 weeks from today. Next, ExxonMobil, XOM. Ooh, interesting. High, low, where was it? Where is it? Up, down, up, down, up, down, up. Okay, what's going on here? Well, let's zoom in and find out. Okay. If you like it, 115. Okay, what's the 115 going for? 187. Well, that's over 1.5% if you like ExxonMobil. Next, SLB, Schlumberger. Melvin, LI. What is LI? Interesting. I'm not quite sure what to make of this thing. Here's your top, here's your bottom. Okay, 2581. That would be the 26s. 132. That's over 5%. That's crazy. Hold that thought for 1 second. We're going to take a look. LI, how often does this company increase its dividends? How often are they profitable? For that, we're going to Yahoo Finance, which gives us historical performance, which gives us historical numbers. What has it done over the last 20 years? Hell no, no dividends. So how do we know when to look at, or how do I know when to look at it? See, the reason why I have dividends was the reason why I showed you this calendar. See, the calendar tells me when the stock is going to pay a dividend. So by looking at the calendar every day or every week, it tells me what companies are up for consideration because the dividend is coming. And when the dividend is coming, the stock has a tendency to go up in value. So when the company stock goes up in value, that's where I want to jump in. Because as the stock goes up, stock price goes up, so does the option price. Okay, and then I want to have the odds and probabilities in my favor. So that sounds like a yes to me, just by looking at that. Now, even though the bottom's here and this thing's shooting up, it doesn't have options on it. So how am I certain when is it going to move? Usually. Okay, here's the last 30 days. Your bottom, your top, she pulls back right there. Now she's going back up. If you like this company, I have no idea who they are. So when I invest in a company, I want to know who they are. I want to know what the revenue is. I want to know what the dividends are. I also want to know how often have they increased their dividends. Because if the dividend is a portion of the company's profits, the profits have to increase in order for the dividends to increase. Now, if the dividends don't increase, that means the profits didn't increase. Yeah, I see that. They're profitable, but they never pay dividends. So that means they take all the money and they put it back into the company for capital growth, for the stock to grow. It's not what I'm looking for. So Me personally, I'm going to say no, thank you, because it's not what I'm looking for. I'm looking, and I'm not hiding what I'm looking for. I'm looking for safe, predictable, consistent cash flow. You can't get that from a stock that doesn't pay a dividend. Okay, or I could, if I wanted to, sit in front of my computer and watch this all day long. No, thank you. I have better ways of spending my time, so I don't sit in front of my computer. Alrighty, alrighty. NLY has a dividend in October. You have to be in it now by September 30th. I get it. But here's the thing. NLY, Annalee Bank. Let's get out of this one. Back to here. Okay, so here it is. The high right here, the low, where was it? Where is it? Down, up, down, up, down. So it's on its way down now. So what am I looking for? Okay. The top, here's the new bottom. So this is going to look good for next week, not this week, because that's only one, that's the bottom right here. Now it can go lower tomorrow. It can go lower Monday. So it's looking for a new bottom and then turning around and go back up. That's what I'm looking for. Melvin, it's a growth stock. Got your concept. Interesting. What's the main reason why it's profitable or unprofitable for Canadians to invest USA? Well, here's the thing. Hold on one second. How fun are taxes at the end of the year with all the sales and purchases? Who's that? Thrasham? That's a cool name. What a nice way of spelling that. Now, I really don't want to get into taxes, but let me give you two little tidbits. Okay, just two. Just give you a rough idea. If you can get access to that 2,500-page book, find in there how many times. You can ask one of the AI. What do you call those? One of those AI thingies. Ask them, how many times does it say taxes are mandatory? You hear that word? Mandatory. How many times in that huge book does it say taxes are mandatory? Then do another search and ask it, how many times in that book does it say taxes are voluntary compliant? Voluntary. Okay, that's one. All right. Number two, also ask ChatGPT or one of those other ones, does it or does it not say inside that little 2,500-page book, that big fat book, any payments made to the IRS are to be considered as a gift? Okay? So, taxes to the federal government are mandatory. Taxes to a non-federal government are voluntary. What is unrealistic gain and loss? Andrea, how are you today? An unrealized gain or an unrealized loss. Let me see. Andrea, if you bought the stock here and now it is at here, that, my dear, is an unrealized gain. Now, I always say every single time, if you bought here, it goes up, you're in a profit. If you do not take it, don't be surprised if it disappears. It's not a profit until you take it. An unrealized gain is when you buy it low and it's currently at a high, but you do not sell it at the high. Same thing with the loss. If you buy it here and it drops to here, that's an unrealized loss. It's not a loss until you take it. That's called an unrealized loss and unrealized gain. Okay? If I buy here, I don't sell, it's an unrealized gain. If it drops, it's an unrealized loss. It's not a loss, it's not a gain until you say, you know what? I'll take it. Okay? All right. Chat GPT, bro. UPS, man. What are you on? UPS? I said we weren't going to do this, but you guys want to do it anyway. All right, UPS. UPS. Okay, same thing. We're looking for the bottom on UPS. Okay? 30-day top, she dropped back up, back down. Here we are right here. Okay, as soon as she finds a bottom, goes back up. Maybe next week, maybe the week after. XRP is not a dividend stock. Andre, you got that? Way to go. Kevo, UNH, you were here last night. I showed it to you last night. What trading platform do you use? Now, John, I cannot tell you which is best for you. But what I can tell you, John, I wrote 14 books. One book was Choosing the Right Trading Platform. Not the greatest book in the world. It's a very short read. But this is what I came up with 15, 16 years ago, however long ago it was. Because I'm looking for something specific. Okay? And Thinkorswim is the only trading platform that actually had it. This is a great occasional format. Thank you, Mark. Waste management. No. Now, the reason I'm saying no to waste management is I don't do monthly options. Do you remember Rule 4, weekly options only? Monthlies just don't work for me. Okay? What else we got? What else we got? Gotcha. XRP. Yeah. Wow, I learned something here. Today is an unrealized gain and an unrealized explanation. Oh, and profit. Explain. Okay, got it. Intel. Strange, we already looked at Intel. ADM. Let's zoom in a little bit closer, see what that looks like. Okay, here's your top, your bottom. Now she's going up. 1, 2, 3. What happened today? That would have been perfect if today was a green day, but no. Today's a red day, which means it pulled back down. Why? Okay, if it was green, it would be perfect. But no, it's red, which means here's your bottom. 1 day up, 2 days up. Well, what happened here? Mixed signals is what it is. ULTY, hell no. Mr. Cash Flow to you. Okay, ULTY. So I'm still waiting for that guy to come back and answer me about how consistently profitable that company was. I'm going to ask you the same thing, Mr. Cash Flow. Go to ULTY, whatever financial website you use, and tell me specifically how many years in a row has ULTY consistently increased its profits to its shareholders? And then we'll take a look at it. Lululemon has been around long enough. Okay? But take a look at it. Here's Lulu right here. Top, bottom, where was it? Where is it? Up, down, up, down, up, down. Now she's going back up, or is it? Is it? Just take a quick look. Okay? Last 30 days, here we go. 30-day high, big drop, 30-day bottom, now she's going up. But what happened today? Again, okay, nice moving up, but then she stopped today. A lower high, a lower low. Is it going down? We don't know. Pharma, BMY, Bristol Myers Squibb. BMY. Looking for a new bottom on BMY. Okay, look. Don't get me wrong, I love BMY, I do. But we're looking for the new bottom. See, we thought it was here. She went up, but then nope, she came down. Okay, so just because you have 2 days to the upside, 1, 2, the third one right there, yep, kept on coming down. TRMD, what the hell is that? No, TRMD, Psycho Smile. I don't do monthlies, they just don't pay. They just don't work. No, thank you. What app is that? Okay, Josh, it's not an app. It is called a trading platform. If you trade on Robinhood, that's a platform. You trade on Webull, that's a platform. Deborah, how are you, Miss Deborah? Good evening. Jed wants to take a look at Merck, MRK. Hell no, same thing. Okay, don't you guys do your own research? I mean, look, she shoots up, she comes down. Looking for a new bottom with MRK. It's on the list for next week because I like MRK. Okay, I like MRK, but I'm not going to buy it until it stops falling. Once it stops falling, turns and goes back up, then I'm good. Nice to see you there, Miss Deborah. Josh, you're welcome. Ticker symbol O, hell no. And the reason why it's a hell no to ticker symbol O, I don't do monthlies. Okay? A monthly option, you can trade it once and only once per month. That means 12 times a year. That means I'm only getting 12 checks. I also wrote a book called 10 to 20 checks per month, like clockwork. Why would I want 12 for the year when I can get 52? If all is equal, if the check is going to be the same for a monthly as it would be for a weekly, why would I want 12, not 52? Jed, SOXL is an index. It's not a stock. Or RKT, is that Rocket Lab? No. All right, let me get back to my list. Next one, Schlumberg, SLB. Dividend King, if you didn't know that. Okay? High, low, where was it? Where is it? Up, down, sideways, up, down, up. Okay, what's going on there? What happened today? It looks like a lot of stocks stopped their momentum today. Okay? Shoots up, comes down, 2 days up, 1, 2, and today would have been the third day, but no, what's with that? John, I only trade companies with a PE ratio, okay, blah, 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 and a zero margin and a high earnings per share. Nothing wrong with that at all, John. There's absolutely nothing wrong with it. As a matter of fact, it's great that you have a strategy. That's great. How's it working for you? Are you up over 30, 40, 50% for the year? Does he really gain profit in 10 minutes? Okay, so Spam Lamb, that's your name? Spam Lamb? Okay, so you want to see 10 minutes. All right, here we go. You ready? Okay, now Spam Lamb, are you ready for this? Now, first things first. You have to find out what stocks you like. Okay, so what I start out with are the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list, because if it's good enough for Warren, it's good enough for me. Next, what I do is I stick it into the calendar, because the calendar tells me when to actually look at the stock. So let's take a look. Coca-Cola, T. Rowe Price, Ben Franklin, ESS, that's ITW, that's Illinois Toolworks, NUE, Nucor, Cardinal Health, Fortis, Roper, MDT, whatever. Pick a good company that you like. Once you get the good company that you like, you take that list and you put that list into the calendar, because the calendar will tell you when to buy, when to look at it. So if all these stocks here have a tendency to go up in value just before the dividend date, well, I want to buy it 2 weeks before, 1 week, 2 weeks, right here on a Monday. I want to do what's called a covered call. It's simple, it's safe, it's predictable, it's consistent. If you do it right, there's no way to lose. Now, when I say no way to lose, I can't really picture a world where there's no more Coca-Cola, no more Pepsi. Ford's gone, General Motors is gone, IBM disappeared decades ago. I can't see that. Okay, these companies were here when I was growing up, the 60s, 70s, and 80s, and they're still here. I don't see it as a possibility of Coca-Cola disappearing. Okay? Just recently started investing. Hagen, how you doing? Mike, alrighty. So, Spam Lamb wants to see how you can do this in less than 10 minutes. All right, so once you get your list, once you know what stocks you're looking at, okay, let's just breeze through them really quick. And it doesn't take that long. All right, so let's do this. What do we like? Advanced Auto Parts. Well, okay. High, low, where is it? Look at this, up, down, up. Okay, cool. So, it's currently at 59.83. So, change this. Right there. All right, Spam Lamb, you ready? 59.83. The closest strike price to 59.83 is going to be the 60, and the 60 is selling for 179. Now, if you don't know what 1% of 59 is, it's 59. So 1% of $59 is 59 cents, and it's offering 187. Oh, sorry, 179. That's more than 2%. Okay? Now, I like it at 60, so let's get rid of this. Let's change this to this, and we want to do the 60 right there. Don't. Mark it right there, and here we go. So here's the order right here that I put into the market maker tomorrow. Buy one covered call, Advanced Auto Parts, 3 October. That means this offer ends October 3rd, which is next Friday. Not this Friday, tomorrow, next Friday. The $60 call option against the stock at the market to open. That's not stuttering. One of those orders goes to New York, the other one goes to Chicago. So I'm buying the stock, selling the option all at the exact same time. Now remember why I said simple, safe, predictable? Do you remember that? Predictable? Well, I know exactly what I'm going to make before I even do the trade. That's a covered call. You know exactly what you're going to make before you even do it. Most people buy stocks and have to wait for the stock to move. Well, a covered call, you don't have to. So let me briefly explain. I'm buying it for $59.83. I'm selling it for $60, all in one trade. It's called a covered call. Buy the stock, sell the option. I get my $200 per contract. One contract, $200. 3 contracts, $600. 10 contracts, $1,000. Whatever you can afford. So to find out the rate of return, you take the profit, 200, and you divide it by the investment, 5,800. So let's get the calculator and find out exactly what that is. Okay, 200 divided by 5,800 comes to a grand total of, I didn't do that right. Let's try that again. 200 divided by 5,800, 3.4%. So you were asking, do I get 1% in 10 minutes? Well, this one right here is 3.4%. Now, what has to happen? Well, number one, I have to be okay with Advanced Auto Parts. Because remember rule number one, never buy something you don't want to hold long term. So if I don't like Advanced Auto Parts, I'm not going to do it. But I do like Advanced Auto Parts. And I'm okay with Advanced Auto Parts being at $59. I'm okay with that. So, I'm looking for 1% per week. This trade right here, buying it at $59.80, whatever it is, and selling it at 60. Okay, I'm making a very small amount on the stock itself, but that's not what I'm looking for. I'm not looking for the profit on the stock. See, here's the part most people don't get. Okay, spam lamb, listen to this closely. Okay, ready? I really don't care about the stock price. My concern, number one concern, is the company consistently profitable? Have they increased their profits consistently? That's it. Then I want to find out, where are they? Okay, I don't care about the price. I care about the motion of the ocean, the movement. Let's get out of this for a second. Okay, back where we were. Okay. Now, this is it right here, Advanced Auto Parts. Here's the high of the year. Here's the low of the year. Here's where it was. Here's where it is. Now, what has it been doing lately? Okay, down, up, down, up, down, up, down, up, down, up. Okay, so it's currently in an uptrend coming off of this high right here. Here's this high, came there, now she shoots up again here, now there, now she's going back up again. I'm looking for momentum. I could care less about the price until it comes to percentages. So if I'm buying it here, 59.83, as soon as it gets up 5%, which would be $6, which would be 64. As soon as it gets to 64, I want to be out. That's 5% or 10%. It's a simple numbers game, and it was created for a 9-year-old. As a matter of fact, we haven't seen the 9-year-old in a little bit, so let me introduce you to her. So you can also, oh, that's the 9-year-old. All right, so first thing we want to do, go to the website, blah, 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 right there. I really got to get this website redone. It's terrible, but at least I got one. All right, so YouTube, You go to YouTube, you will see I have 1,002, well, actually more than 1,200 videos right there. 1,200 videos. Have fun watching them all. Yeah, I've been on since 2011. Okay, videos. Here we go. The oldest videos. And there she is right there.
Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad doesn't like me calling it that, but I do. Being part of that,
Little smarty pants she was.
Weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you could choose from that'll help you get the best return on your money.
There's me. Long time ago. Look at all the hair I had. No gray. This is my favorite part. So, in order to keep a 9-year-old entertained, okay, I had to make it fun. So we did a lot of crazy stuff. This is one of the little skits that we did. Behind me, you'll see, is an EX dividend calendar. They didn't have them 15 years ago. I had to make that one on a whiteboard and then manually, you can't really see it, but manually fill in all the different stocks that we're trading throughout the year so that me and my daughter can, spend time together, father-daughter type scenario, but also to show her how simple and easy it could be. The funny thing is, the wife could care less. The boys, they didn't care less either. They didn't want nothing to do with mine. My daughter did, which is kind of strange. Little girl's like, Daddy, can I have a bunny? Daddy, can I go get a new dress? Daddy, can I go get my hair cut? No. Daddy, can you teach me how to trade stocks? That's what she wanted to know. So it was fun and interesting right up until she was 13, because you women know what happens at 13. Daddy's no longer Daddy. Daddy's the walking ATM devil. So some of you guys might know that. Most of you girls will know that. Anyway, so that was JC a long time ago. When was that? 13 years ago. Wow. Okay. Let's get back to where we were. So the trading strategy was created specifically for my 9-year-old daughter. Now I have to admit that video was when she was 11. Okay, because the first 2 years that she was trading, YouTube didn't have any video. Excuse me. What the hell was that? All right. So in 2008, 2009, when she first wanted to learn, they didn't have videos. Okay. I remember the first videos we took at a big, huge camera. Remember those big, huge VHS cameras? Yeah, I had one of those. I'm holding it like this, trying to videotape her. It was definitely interesting. All right. What other questions do we have? TSLA. Uh-oh. Somebody wants to take a look at TSLA. Is that Patty or Potty? Or Patty? TSLA. I'll try it one more time. TSLA. Now, I got to be 100% honest with you guys. I don't trade Tesla yet because Tesla doesn't have any dividends. So it's very challenging for me to find out exactly when to buy Tesla and when not to buy Tesla. You get the high here, the bottom here. Okay, she shoots up, drops, up, down, up. Now she's a little bit of correction right there, right now. So not the right time to buy Tesla. Okay, because 30 days ago we're here. Shoot up, pull back. Shoot up, now it's pullback time. So Tesla might be good in another week or two, but not this week. Not for me anyway. But I am going to eventually buy Tesla because you just can't escape the man. You can't. You take a look at what is he doing. He's making plans to go to another planet and colonize another planet. But here's the thing. He's got everything in line to do that. Okay, solar, which means he can get energy, which means, he can run whatever he's going to run. He's got AI, which means he can run all those robots of his. He's got that tunneling machine. He's got that rocket ship company. And he has a whole bunch of other things, all geared for one thing and one thing only. So in 100 years, you say, who's the first person to settle Mars? Tesla. Can't get away from it. Now, if he only had 1 or 2 ingredients, I said, maybe, maybe not. But he's got everything going, and that's his goal. He'll get it, most likely. 50% of the live goal has been completed. Yay! And satellite internet too. Yep, forgot about that one. Uh-oh, we got some issues here with my phone plugs. Let's play Swappy Changey because we're going to lose this channel over here, which is kind of okay because not really anybody there. You know? Anyway, besides the point. Because that's Tesla. I don't invest in it yet because I got to find out when is the right time to buy Tesla. Because without dividends, we don't know when the predictability of the movement is. See, that's the reason why I like dividend stocks. Because every 90 days, they are predictably moving towards the dividend payment. Okay, I found that many, many years ago. I said, wait a minute, that can't be right. But then you check the data. Check the data, go from 10 years. Okay, for the last 10 years, how has this stock reacted to the dividend payment coming up? And 10 years out of 10, the stock has a tendency to go up just before the dividend date. I was like, whoa, that's cool information. But that's only part of the equation. Just knowing when a stock is going to move is not enough. You have to have the right strategy. Well, when I ask people, if you knew when a stock was going to move, okay, with a 80 to 90% certainty, what would you do with that information? And almost everyone says the exact same thing. Well, I'd buy that stock. Well, I wouldn't. I'd do a covered call on it because I can get 2, 3, 4, 5% consistently every single week. And I want consistency. What I'm looking for, consistency, safety, predictability, profitability. I like the Lee family. All right. So John's up 30% this year. Cool beans, John. Another reason not to buy monthlies is they offer more than 8%. Okay, Jeff, thank you for that. Le chocolatier. Bonjour, bonsoir. Comment ça va toujours? Ça va bien, no? Lord Face, yes, gotta love it. Okay, Judy, my brother worked for Elon Musk. He's a tough boss. Well, you gotta be a tough boss. Uh-oh. Target, so you guys don't want to see, apparently you don't want to see what I have written down. I've been doing this for almost 30 years, and I say, you know what? That stock looks good. You guys don't want to see it. Fine, we'll take a look at what you guys got. Show us the equation one more time. Johnny, sit tight. We got a couple more people doing that. Young X may see Mars. Yeah, they might. Satellite internet. Yeah. Good to see you. Mindy's, how are you today? Is the 1% come from the stock price? No, the 1% comes from the premium. Let's see what you got on that paper. Yeah, Eric wants to see that, but Eric, sorry, dude. I got six channels here. Okay, you want to see the list. These people over here, they want to pick up their own stocks and want me to see their crap. This guy wants, Jessica, sorry. Jessica wants me to take a look at SPY. I hate SPY. Jessica, I'm going to show you why I dislike SPY. Maybe, just maybe, you'll change your mind. SPY. All right, Jessica, you ready? Give it a second. It's loading. It's loading. There it is right there. SPY. Let's take a gander. All righty. All right, Jessica, you ready for this? It moved on me. Did you see that? It moved on purpose. Wanted to aggravate me. Spider SP 500 ETF SPY $658 per share out of my price range. I like to stay under 300, but it's okay. You ready, Jess? Here we go. Dividends only, going all the way back to 1986. Now, what I'm looking for specifically, Miss Jessica, is does SPY consistently increase its dividends to its shareholders? That means you buy the stock, you buy the ETF, or what is this called? Yeah, it's an ETF. If you buy the ETF, are you getting more money every single year, higher and higher and higher and higher? Let's check it out. You ready, Jess? Let's go. Let's go all the way back to 2005, because 2005 is 20 years ago. Okay, so sit tight. Hold on. All right, Jessica, here we go. March 18th, 2025. Ready? 40, 46. 48, that's higher. 52, that's higher. 67, that's higher. 51. Jess, Going from 67 to 51, that's not higher, dear. That's lower. When I say consistency of profitability, well, when you say 67, I want to hear 68, 69, 70. I don't want to hear 51 because 51 is going backwards. Hold on. I'll give you the benefit of the doubt. Hold on. 51. 55, that's higher. 57, that's higher. 79, that's higher. 55, wait a minute. Time out, time out. That's twice. It's gone down. That's not consistent profitability. But hold on. It gets worse. It really does. All right, 55 right there. So let's move this down. Wrong way. 55 right there. All right there. 55, 65, 71, 60, 77, 64. That's the third time it's gone down. 66, 69, 71, 56. Third time. 51, fourth time. 50, fifth time. And we're only in 2009. And it's gone down 5 times. Do you see that, Jessica? Hold on. It gets worse. Really does. Right, 51, 2009. Okay. 51. 50, that's 6 times. 59, that's higher. 48, that's lower. That's 7 times. 60, 65, 55, that's 8 times. 53. 60, 65, 50. I did that one. 62, 62, 77, 61, 8. I'm going to stop there. I am. Now, Jess, hold one more second because I got something else to show you to make you feel even worse. You ready? Now, we're going to get away from historical data and we're going to go to the summary. The summary is going to give you a good idea of what this thing has done over the last year. So summary it is. Now, anytime you're investing, you should have access to a financial website. Whatever financial website you want to use. Uh-oh, my cords are all over the place. And I can't get to that one. You know what? It's going to turn off soon. Well, it's going to turn off. It's going to turn off. Oh, well. Oh, well. Oh, come on. There we go. All right, so Jessica, you ready for this? All right. Jess, you ready? Previous close, previous open, bid, ask, daily range, 52-week range, volume, average volume, net assets, the NAV, the PE ratio. The next one's the important one. Let's get rid of that. Okay. The PE ratio, 27.8. Check this one out, Jess. You ready? The yield. Remember when you invest in a CD? Hey, get a 90-day CD. You get a 1.2% yield. Or hey, get a 1-year CD and get a 1.1% yield. Well, guess what? You're paying $657.98 for 1.11% for the year. 1.11% for the year. And you're going to tell me that that's a good thing? So let me say again, no, I don't like SPY because the numbers are crap, in my humble opinion. But what do I know? NUS. I know it's a telephone company. Which one is it? A new skin. No, I was wrong on that one, wasn't I? New skin. No, I don't do monthlies. They just don't work. No. Time to delete. She's not going to feel worse. She's going to turn around and buy it again tomorrow. I'm sorry, Jess. Somebody over on one of the other channels says she's not going to feel bad. She's going to go and buy some more. 1.1% for the year, and you're going to go buy some more. All righty then. Okay, Laurie wants to see the list. Can we go back to your stock? I've tried to connect. All right, if you try to connect, you got to go to the top left, right where the bio is, my little picture up in the corner. Click on that. DM me with your number. I'll give you a buzz. But you're actually going to figure, reverse, or we're heading to 620. James, you're a little late. I have no idea what you're talking about. That paper, yep. All right. Okay, so he wants to look at the paper. Automation. 1-1 is losing money. Inflation is beating you. I'm going to agree with you. I'm going to agree with this dude. Zach, we had to look at Schlumberg a little earlier. T-Mobile. That's T-Mobile. That's what I was thinking of. T-M-U-S. T-Mobile. Okay. High, low. Where was it? Where is it? Up, down, up, down. Okay. What's going on here? Well, let's zoom into that and see what that looks like. Okay. Last 30 days. Here's your top. Here's your bottom. 1, 2 days. 2 days to the upside. Well, that looks good. That's what I'm looking for. Don't get me wrong. I like T-Mobile. T-Mobile's all over the place. Okay. 237.94. The 237 right there. 345. That works. That works. Why not? T-Mobile, if you like it. All right, what else we have here? Alan. Alan wants to see the list too. All right. Hey, Hollywood's in the house. Laurie. Yep, Laurie wants to see the list too. Verizon will fall away. T-Mobile will win. You never know. Could very well be. All right, let's get back to the piece of paper. Jessica. Oh, you didn't know that, Jessica? I'm sorry to enlighten you, my dear. But see, my philosophy, this is just my philosophy. I don't ever want to invest in something that's not consistently profitable. Hold on, I'm going to show you something, Jess. Because I think you may have seen something. We actually could take a look at another one. Go look at Microsoft, because you know who Microsoft is. Historical data. Okay, because we want to see the dividends and how they increase. Okay, historical prices. See, it says historical prices. I want to change that to dividends only. Oh, come on. Uh-oh, we're having an issue. I hate when we're having issues with the computers. Oh, it's frozen. Damn it. What I was going to show you, Microsoft, every single year is higher and higher and higher and higher profits. Aren't dividends just priced in? No. Like if a company hasn't issued dividends, then the stock price would be just a bit higher because they are just holding the cash. Okay, so Carter, let me explain something to you. In the late 1500s, you got a bunch of businessmen got together and say, we want to create the biggest, baddest company the world has ever seen. Well, how are we going to do that? We're going to need a lot of money. They literally went door to door. Hello, have I got a deal for you? You invest in our company. We promise to share some of the profits with you. That was the pitch. They went door to door to the peasants, to the common people. The name of the company, the Dutch East India Shipping Company. It is the biggest company there ever was until Apple came around, or Tesla, whichever one's bigger now. But that was the Dutch East India Shipping Company. They averaged 18% for 198 years. The deal was, you invest in our company and we will share the profits with you. Well, nowadays they take the profits out. So what you're saying now is what they're doing nowadays. But originally, the dividend is a portion of the company's profits they give back to the investors for owning the stock, for believing in the company. Now, other companies, they take all your money and they put it back into the company so it grows higher and higher and higher, faster and faster. That's not what I'm looking for. I'm looking for cash flow. There's a difference between the two. Just are holding the cash. Okay. Automation Myers, let me tell you this about Microsoft. Big companies are paying hundreds of thousands of dollars a year to cloud infrastructure. They will never stop paying. It's the next frame like a cash cow. Okay, thank you. That actually makes sense. All right, Carter. I feel better tonight. I can leave. Carter makes it. All right, I'm done. I'm done. I got through to Carter. I can leave. See you guys later. So I have no idea who Cotter is. This is the first time here. Thank you, Cotter. I'm glad you see it. All right, so next, NIO. NIO. Interesting. However, I have a minor issue with a company that was $3 a couple of months ago. Does this thing have 2 decades, 20 years of increased profits? Either it does or it doesn't. Rex, thanks for the rose there, Rex. Very nice of you. Felix, Applied Material. Ouch. I'm sorry, Jessica. But seriously, Jessica, if you're going to be investing your own money, there's nothing wrong with it. It's a great idea. But don't you think it'd be a wise idea to see if wherever you're putting your money, they're consistently profitable? Okay, but it depends on what you're looking for. Now, if you're looking for capital growth, buy a stock, have it shoot up, you're in the wrong place. That's not what I'm looking for. I'm looking for a simple, safe, predictable, consistent 1% per week because I'm retired, okay? And I did not hit the lottery. My niece hit the lottery. Want to hear a funny story? My niece hit the lottery, $15 million. She's broke now, working 9 to 5. Did she ask her uncle? No. Her uncle's written 15 books on investing. Did she ask my advice? No, not at all. She's back working 9 to 5. Hi, Christine. How are you? Anyway. Landon. Landon, I'm going to tell you the same thing I told the other two guys ahead of you. Go check whatever financial website you use and see how profitable YMAX is, and then come back. We'll chat about it. Does your niece hate that you use that story? I doubt she even knows. Okay? See, I don't invest money for any of my relatives. Because relatives, the first to complain, the last to pay. So I don't tell I did it for my mother once. I made her so much money, but when I lent, no, I just don't do it anymore. I don't do anything for friends and relatives. It's the best way to ruin a friendship or a family. Money. It's a horrible thing. Sad. Because my sister wanted to retire and go to Italy, but she doesn't have enough money. And I think the money that she has, I think, well, actually you do if you do this. But she doesn't trust her younger brother because her younger brother doesn't know anything. So you don't, it's like children don't listen to their parents. They'll listen to their friends' parents, but they won't listen to their own parents, which is kind of weird. Because my son-in-law, he's all excited about what I do, and he wants to learn, okay? My children, no, they don't care, because they're used to it. They're used to dad making X amount of dollars. They're used to that kind of stuff. But someone outside the family, it's like, holy shit, you do that? I say, yeah, I do. Anyway, do you think tomorrow we recover? From what? I don't know. What question is that, Automation Maven? Looks like the Sharpie ratio of Bitcoin is better than SPY now. What's everybody's thought on that? Okay, number one, I don't do Bitcoin. I don't do any cryptocurrency whatsoever. So I really don't care what the crypto people think about it. All right? And SPY, I don't like that one either. Okay, see, I'm looking for companies that are consistently profitable. Now think of this for a second, if you will. Okay, this country's been in here for a couple hundred years. All right, we're doing relatively well, depending on how you look at it. But over the last 100 years, let's go back all the way to the late 1800s. Okay, late 1800s, all the whole 19th century, the 20th century, whatever. Okay, so think of that for a second. Oh, damn it. I need this cord over here. Oh, this one fit? Maybe. Is that one gonna work? No, that one don't work. Does this one work? Yeah, that one works. Cool beans. Put this one right here. So what was I about to tell you my story? Oh, come on. There we go. All right. I forget which story I was just about to tell you. Next, let's go. YMAX, UAL, United Airlines, UAL. All right, I'm going to say no to United Airlines for this week, but maybe next week. Check this out. Here's your bottom, shoots up. Now she's back down here looking for the new bottom. As soon as she finds the bottom, the 99s are going for 272. That's over 2%. If you like United Airlines. Isn't that weird? Do you like United Airlines? WiMAX dividend yield. Landon, okay? The first time you asked me about WiMAX, great. Go to a financial website and then tell me, how many years has WiMAX consistently increased their dividends? That's what I want to know. Time to delete. I told you Jessica is going to buy it again tomorrow because she doesn't understand the concept of one. Jessica, did you hear that what he's saying about you? Who is that? Time to delete. All right, anyway. She doesn't understand that within 1% comes less risk. Well, that's true too. Do you only sell your covered calls on the week of the EX date? Oh, hell no. 2 weeks prior to the EX date. Because the dividend is factored into the premium on the date of the EX date or the date of the dividend. So I like to stay away from the dividend date. I want to do it 2 weeks before, get in, get out, and then move on to the next one. Because if you take a look at the charts, not the charts, the calendars, okay? Let's do this right here. Okay, do you see this here, all these little green dots? Okay, there's 74 companies paying a dividend on the second. There's about 20 here, about 20 here, 57 on this day. That's over 200 companies just in the first week of September. The first week of September, over 200 companies were paying a dividend. So what am I looking for? There's 4 dates. First date is the announcement date. That's when the company says, hey, everybody, my name is James from Dividend Stock Talk. This is how much money we made. This is how you're going to get yours. This is when you're going to get it. And aren't you all excited? It's the announcement date. It's telling how much did you make and how much you're getting. They announce it. That's the announcement. It's the first date, date number 1. Date number 2 is called the EX dividend date. That is the last day the stock trades before the dividend is paid. If you want to collect the dividend, you have to buy it before the EX date. If you buy it after the EX date, you don't get the dividend. It's that simple. It's kind of like that sign you see on the door, open 9 to 5. You show up at 8:30, you ain't getting in. You show up at 5:15, you ain't getting in. 9 to 5 means 9 to 5. EX date means this is when we're paying our dividend. If you want it, buy it now. Okay, buy it. Okay, here, the second. Campbell's soup right there on the second. Buy it the 1st, the 30th, the 18th, the 10th, the 11th, the 12th, the 2nd, the 3rd, whatever. Any day before the EX date to get the dividend. That's date number 2, the EX dividend date. Date number 3, date of record. Whoever owns the stock on the date of record is entitled to the dividend. Think of it back in the 1700s, 1800s, 1900s, early days. Oh, PJ, BJ. BP, whatever. Okay, the bookkeeper would get a book and they say, John Phillips bought 10 shares this date. Now he takes the book and he hands it to the check writer. The check writer takes the book, the date of record. Okay, John owns, okay, he gets a check. Pete, oh, he's down here. He gets a check. Okay, the date of record is whoever owns the stock on the date of record is entitled to the dividend. How long do you hold the stock? Until it hits my target. Kilroy, thank you for that. All right. Simone is in the house. All right. Oh, date number 4. Sorry, date number 4. Payment date. That's when you get your check. 4 dates. Announcement date. Hi, hello. Date of EX date. Last day the stock trades. If you want to get the dividend. Date number 3. Date of record. If you want to collect that dividend. Number 4 is the payment date. That's when you get your money. That's if you're interested in dividend. Now, I'm not interested in the dividend. It's called dividend investing for weekly cash flow. I use the dividend to tell me when to buy the stock. Because if you look at these stocks, they have a tendency to go up in value just before they pay. Because there's a lot of people out there that like to collect those dividends. A lot of these old folks, I want to collect that dividend. Buy the stock, collect the dividend. When it goes up, they sell it. It's called dividend capturing. It's a very old strategy. It's about 400 years old. Buy the stock, capture the dividend, sell the stock at a profit. Buy the stock, collect the dividend, sell it at a profit. It's called dividend capturing. How do you determine your strike price? Oh my God, Alex, I can't believe you're asking that question. No, all right, see, I'm going to apologize for that little bit of an insult because you didn't know. Let me show you. It's really not that difficult. You ready? Here's your strike prices right here. 97, 98, 99, 100, 101, 102, blah, 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 so on and so forth, right? The current price, 99.15. How do I choose my strike price? 99.15, the closest strike price to 99.15. 99. Come on, it's right here, 99. Now, if it was 99.60, the closest strike price would be 100. If it was 99.98, the closest strike price would be 100. If it was 99.01, the closest strike price would be 99. No, Alex, it's not under. It's whatever is closest. Okay? If it's 99.01, I'll go for the 99. If it's 99.66, I'll go for the 100. Whichever strike price is closest. And then, what is it paying? Well, the 100 is paying 223. Well, 223 is 2.25% of 99. Well, hell yeah, I do the 100. But the 99 is going for 272. Well, that's even higher. But the nice thing about the 99, you know what? Let's do it. Let's do United at 99. Let's see what it looks like. You ready? Let's do this. Let's get rid of this. Let's change this to covered call. Now, wait a second. Before I go on, let me just inform you guys briefly, in case you didn't know, for those of you that are new here, this screen here is being broadcast live on YouTube. So if you're at home, you can take your little phone, your tablet, or whatever, go into the other room, sit in front of your big screen TV, and pull it up on YouTube. And that way you can see these little tiny numbers. Okay, also, it's being live broadcast and it's being recorded. So at this moment in time, it is 10:32 p.m. on the 25th of September. So it's live right here, right now. And it's being broadcast. So you could pull it up on your TV and watch it on your TV. I know there's some people, they call me every once in a while and say, hey, James, I got the phone in one hand and I watch it on the big screen TV. Some people do that because the big screen TV, you can see all little tiny numbers, which you probably can't see those on your phone or your tablet. And if it makes sense, you have the ability to go to YouTube, okay, the10minutetrader.com. It's right in the link in any one of the bios. Anyone. There's 9 channels here. Any channel you're on has information about me, my website, and all that other stuff. So you can go and you can rewatch it. Say, wait a minute, I knew he said something, and it was right around 10:23. Let me fast forward it to that time. Anyway, so let's go back to where we were. So I like UAL at 100. I mean, at 99. Resent. Please, short explanation of the 1% strategy. Oh, you're right on time. We're about to do it right now. So at this moment in time, the last trade today was 99.15. So if I buy it tomorrow morning at 99.15, I'm going to turn around and sell it to someone else for 99. Great info tonight. I'm ready to list. Okay, yeah, we'll get to it. All right. Don't get old. It's no fun. $99.15 is the current price. So tomorrow morning, if she opens up at $99.15, I'm going to sell it at $99. So I'm going to buy it at $99.15, and I'm going to sell it at $99. I'm losing 15 cents. Not really. Because the premium that I am collecting, we can take the 15 cents right out of that, and I'm still walking away with a nice profit. As a matter of fact, let's check out that profit. The 99 right there. Okay, let's do just one contract so I don't scare you away with big numbers. At the market, here we go. Now, here is what it says. By one covered call UAL, that's United Airlines. 100 is the weeklies, which means there's a weekly option attached to this. 3 October 25, that is next Friday. So this trade here, I'm buying the stock, which means I own it at 99.15, work with me here, and I sell it to someone else. Let's say I'm going to sell it to Peter. Okay, Peter's going to buy it and say, great, I'm going to buy this. Why not? Now, he has the right to buy it from me at 99, but he's paying $260 for the privilege of buying it from me for almost the exact same price I just paid for it. Isn't that weird? I'm buying it for 99, I'm selling it for 99, and I'm walking away with $260.50 per contract. So every single contract that I have, if I have 10 contracts, that's $2,600. If I have 100 contracts, that's $26,000. It's all relative. 1% is 1%, no matter what you got. All right, so anyway, let's just go for this one trade. All right, you ready? 260 is the profit. So I'm going to get my calculator. To get the rate of return, you take the profit, 260.50. That's the profit, 260.50. All right, 260.50. Oh, wait a minute. Wait. That's not right. $260.50. There it is. And then we divide that by the cost of the commission, the cost of the trade right here. The cost of the trade, including commissions and fees, right there. 9,600. Now, remember when I said, hey, everybody, this is James. I'm looking for a simple. Okay, it's one of the easiest strategies there is. Safe, it's one of the safest strategies. As a matter of fact, it is so safe, the federal government will allow you to do it in your IRA. You cannot do certain trades in an IRA, but you can do a covered call. That's how safe it is. Simple, safe, predictable. Remember I said that? Predictable. I know exactly what I'm going to make before I do it. $260.50 for each contract. So if I can do 5 contracts, well, that's over $1,200, something like that. Somewhere in that area. Simple, safe, predictable. Remember I said consistent? That's why it's weekly options, because 3 October is next week. Okay, 26 September is tomorrow. 3 October is next week. 10 October is the week after. 17 October is the week after that. Every single week. So if someone doesn't buy it from me for next week, well, I just do it again next week and I get another percentage. Look at it this way. Okay, we're not quite done yet, but look at it this way. Let's say, hypothetically speaking, we're not buying a stock. Let's say we're buying a vending machine, a bubblegum machine, candy machine, soda machine, snack machine. You put a couple dollars in, you get your money back out. But what is the snack machine costing me? What is the vending machine costing me? It's costing me $9,600. Okay? But what am I getting every single week? Every single week. Now, I'm not buying a stock. I'm buying a weekly cash producing asset. It's an asset that's going to give me a return every single week. What is it taking me? I don't have to go there, empty out the machine and take all the money out. No, I just got to sit in front of my computer. What did I buy it for? What did I sell? What's it at now? What should I do next? It's actually that easy. Okay, so cost of trade, including commissions and fees, $96.40. So we take the profit, divide it by the how much we paid, $96.40, gives me a grand total of 2.7% for 1 week. That's 2.7%. Now I'm looking for 1%. Okay, now I have to admit, all right, that although it's giving me 2.7 this week, next week I have no idea what it's going to be. It might be 0.5% next week. It might be 3% next week. It might be 1 3/4% next week. But here's the thing. If I average 1% every week, so I get 2.7 out of this one. Maybe I'm only getting 0.5% out of my IBM. What if I'm getting 0.75% out of my Ford? Always, always, always only buy companies you're willing to hold on to for the long term. If you like United Airlines and you're okay with holding it for a long time, fine. But if it hits my target, I want to get out. Take my profits, take my marbles, and go play in another sandbox. Simple as that. So what's my target? 99. What's it at right now? 99.15. So as long as it stays exactly where it is, I'll be fine. As a matter of fact, it even can come down just a little bit. As long as it's over 99 by next Friday, I'll have all my money back and I get to keep the 260. Think of it as a non-refundable cash deposit. But I like the theory of, hey, it's a weekly cash producing asset. It's not stocks, it's a weekly cash producing asset. And it's costing me $9,600. Well, it cost me $9,600 when I bought it. I refused to sell it for less than $9,600. So next week might come. If it stays over 99, I get my $9,600 back. But I get to collect that premium every single week. That's why I'm doing it. Every single week I can collect a premium. The premium I'm looking for is 1%. All right. Next. VBNK. What the hell is that? VBNK. Never heard of it. Has anybody else besides me never heard of VBNK? Okay. VBNK. VersaBank. Hell no. I don't do monthlies. They just don't pay. As a matter of fact, I haven't done this in a while, so just for the fun of it, let's do it. You ready? All right. I can't even do this one. It is so horrible, I can't even do it. Okay, let's say hypothetically I buy it tomorrow morning. Right now it's 12:53. If I buy it tomorrow at 12:53, the 12.50 is going for 0. How the hell am I supposed to figure out 0? And then look at this. The 15, 0, 17, 0, 0, 0, 0, 0, 0. No, hell no. I don't do let's do O Realty because O Realty is a monthly also. And I'll tell you why I don't do monthlies. All right. This is why I don't do monthly options. Are you ready? The current price, $59.79. That means the closest strike price is going to be, let's hear it. Right. Tony in the back, I heard you. 60. It's paying 65 cents. Yay, 65 cents. Let's do some math. Quick math right off the top of your head. Okay. So, calculator. 65 cents. Current stock price is $59.79. Divide 59.79 comes to a grand total of awesome 1.08%. Isn't that great? 1.08% for 1 month. That's only half the battle. Hold on, it gets worse. It really does. Hold on. Check this out. I'm going to open this up a little bit further. Okay, now follow the bouncing ball. Are you ready? Here's the high, here's the low, here's where it was, here's where it is. Look at this. Down, up, down, up, down, up. That is 30 days. Count it, 30 days. Today's 9/25, this is 8/25. That is 30 days. Now, tell me where this is going to be in 30 days. That's why I don't like monthlies. It's hard enough to figure out where the hell it's going to be in 30 days, but look at what it's offering me. 1.07, what the hell, I forgot what it was, for 1 month. I don't do monthlies, the numbers just don't work. Terribly sorry. And to make matters worse, How the hell are you going to figure out what that's going to be in 30 days? I don't do monthlies. They just, and it's the same. You go back and look at all my videos. Anytime I give you a monthly, it's always the exact same. The numbers just don't work for me. If you're okay with 1% a month, hey, more power to you. I don't tell people what to do. I'm not telling you anything. I'm observing. Okay, you give me a stock, I tell you, oh, it's at this. I'm not telling you to do anything. Matter of fact, you shouldn't listen to a word I say. Do your own research. Does it make sense? Ask questions. Don't believe what people tell you. Research and find out facts. Because when you go to a money manager and say, here, take my money. What are you going to give me every year? 4% draw? Yeah, hell no. But that's what they're offering. Anyway, let's keep on going. What if I can't cover one contract? Alex, you can. If you can't cover one contract, I feel bad for you. As a matter of fact, let's take a look at this. Hold on. All right, Alex, here we go. You ready? All right, not that one. What one do I want? Watch CBO Weekly. Here we go, right there. All right, Alex, you ready? This list right here, CBOE Weekly Optionable Stocks. Chicago Board of Options. That's where all the options are traded. Chicago Board of Options. These are all the weekly options. These are all the stocks right here. Look at the price, $1.07, $1.30, $1.69, $2.43, $3.16, $3.44. There's a whole bunch of them. $3.44. What do we have here? Okay, $4.62, $4.81, $6.46, $8.33, $8.75, so on and so forth. There are plenty of them out there. You just got to find the ones that you like that fit what you're looking for. Okay, everybody's different. All right, what else we have here? How do you scan which stocks to do covered calls on? Trade Architect, did you see that right there? Chicago Board of Options, CBOE Weekly Optionable Stocks. If you want weekly options. They also have CBOE Monthly Optionable Stocks. Oh, it depends what you want. Now, we already looked at UPS earlier. Epic Gamer, DVLT. What the hell is that? DVLT. Never heard of it. And that's probably why. Check that out. No options, no thank you. VIG. What the heck is VIG? No. Okay, you weren't listening either. Okay, didn't I just say I don't do monthlies? The numbers just don't work? Wasn't rule number one, never buy something you don't understand? So if you understand VIG and you know it's on monthly optionable stock, well then, and I don't buy at the high. Well, this thing's at the high now. Why the hell are you showing me something that's a no, no, hell no? Anyway, next. How do you get paid the premium though it's in the form of a lower stock price than the big number? Mike, I'm not 100% sure I understand that question, but here's the thing. Let's pick up a good one. Ooh, here's one. Nice. Look at that. All right, this is Philip Morris. Okay. Here's your high, here's your low. See, she's going up right now at 164, 164. The 165 is going for 175. Oh, hell yeah, I'll do that. That's over 2%. Why the hell not? But here's the thing. All right? Mike Sweeney. Anytime you buy or sell a stock, you have one choice and only one choice. You cannot buy from me. I cannot sell to you. You cannot sell to me. You cannot sell to the person next. You can't sell it to your neighbor, your aunt, your uncle, your niece. No, you can't. You can sell it and buy it from one person and one person only. That's the market maker. Okay? Think of it as, hold on a second. Think of the stock market as your corner store. Circle K, Quickie Mart, 7-Eleven, Quick Stop, whatever corner store you have. Okay, the market maker is the guy behind the cash register. He's the owner of the store. He buys from the farmer. He buys milk from the farmer. You can't buy it from the farmer. He buys candy from the manufacturer. You cannot buy candy from the manufacturer. You have to be a distributor or a wholesaler. So you go to the corner store to buy a gallon of milk. Now the market maker will buy it for $3 and he will sell it to you for $3.50. That's how it works. Stock market's the same way. If you want to sell, you can only sell it to the store owner, the market maker. If you want to buy, you can only buy it from the store owner, the market maker. Okay, that's this number here. Bid, ask. So if I'm buying, I'm paying $164.74. If I'm selling, I'm collecting $164.07. The difference between the two is called the spread, and that goes to the store owner, the market maker. That's how he makes his money. Okay? So if you want to do a covered call, you buy the stock and then you sell the option right on the same exact platform. Okay? You just call up your broker. Say, hey, walk me through this. I want to do a covered call. That's what the broker's there for. He will walk you through the very first one. He will show you how to use the trading platform. Are you doing covered calls, Alex? Yes, I am. Hayes, so you sell put first and then just buy the stock? No. Hayes, that's called the wheel method, and I don't do that one. Do you think tomorrow will recover? I have no idea. Patrick, how are you doing today? Wildo Baggins. Amen. I learned not to mess with family after working for them. Yeah, you don't want to work with family, and you don't want, it's very hard, I should say, it's very hard to work with family. Okay, say I have found over the years, family's the first to complain and the last to pay. That's what I found. I could be wrong. Your family could be different, but I just prefer not to do it anymore because it's too much aggravation. Eric wants to take a look at Cisco, CSCO. Well, it would help if I actually did this right here, CSCO. Okay, interesting. When I do a covered call on Thinkorswim, the premium doesn't go right into my account instantly. Yeah, it does. Okay, it doesn't go to where you see it. It goes into the cash sweep, and it's being held in your cash sweep until Saturday when the options expire. But it depends on how long you've actually been trading. See, mine gets credit to my account the very same day, and I can use it the very next day to spend. So you buy the stock first, then do the covered call. No, Hayes, I do it all at the exact same time. It's called a covered call. A covered call, you buy the stock and sell the option all at the exact same time. Now you can do it separately, buy the stock first, and then later on sell an option against it. If you buy at 99.15 and you want to sell at 99, what happens if the price is below 99? Mike, you see. Okay, so Merv, what happens if the stock goes below 99? Simple. You keep the stock, and then you turn around and sell it to someone else at 99 on Monday, or you sell it at 98. But if you're selling it below what you paid for it, you better keep your eye on it and make sure it's not at the point where you can be called away. Because you have to keep, the numbers are very interesting. So let's say hypothetically it drops below 99. Let's say it drops to 98.75. You can still sell the 99 against it, okay, and collect whatever premium that's going to be. Or you can lower your strike price to the 98 and get a higher premium and take $1 right off the table. So as long as it stays above 98, then you get called away. Because whatever you sell, you got to remember, it's always a math problem. What did you buy it for? 99.15. What did you sell? The 99. Great. What did you get for it? Well, if you got $2 and something change for it, you didn't sell it at 99. You sold it at 101 because you take that premium and you add it in to the strike price. That's your profit. What do you walk away with? It's just a numbers game. What did I buy it for? 99.15. What option did I sell? The 99. Great. What did I collect? Whatever that was. So at the end of the week, you decide if it's at 99, well, I can roll it into next week and pick up a little bit more money. Or if it's below 99, I keep that money, I keep the stock, and I do it again next week. I just change the strike price to whichever makes sense financially. Oh, holy cow, we got 5 minutes left. Let's get this out of the way. Let's just questions. 5 minutes, get questions. All right, sorry about that, got a little carried away. Ooh, MPW, love it, next week. What if the stock goes higher, it will be called away? That's fine. Okay, so if I buy it at 99, right, 99.15, I sell the 99, pick up 243, whatever it was, and it goes up to 110, 120, whatever, I don't care. I got my money back and I got the profit. I'm only looking for the 1% profit. People always get the idea, well, the stock is going up, don't we collect it? No, we don't. I'm not looking for that. Great, someone else made that money, not me. I got my 1%, which is what I was looking for in the first place. What delta do you choose for covered calls? Monkey man, I don't. Okay? Monkey man, what I'm looking for is a simple, safe, predictable, consistent 1% per week. If I buy it at 99.15, the one we're just talking about, okay, and I can sell somebody the rights to buy it from me at 99 and collect $2.67, I really don't care what the delta is. Okay, so you're relatively new, so you don't remember the part where I say I created this strategy specifically for my 9-year-old daughter. I was not about to try to explain the Black-Scholes pricing methodology for standardized options, which takes into consideration the Greeks, which the delta is one of the Greeks. So no, I did not try to explain that to her. It was simple. If I'm buying it for $99.15 and I'm selling it for $99, and that's $2 or more, well, that's over 2%. I don't care what the delta is. Does that make sense? Kohl's, Macy's pay solid dividends and weekly options. What is your evaluation of them? Okay, number one, Kohl's and Macy's do not pay weekly dividends. They have quarterly dividends, but they have quarterly dividends, and they have weekly options. There's a big difference between an option, a dividend, a stock, a premium. It's a whole new set of language. It's like if you never driven a car before and you're getting ready to drive a car for the very first time, okay, 3 or 4 years old, you didn't know what an altimeter was or an alternator. You didn't know what a gas gauge was. You didn't know the gas pedal, the brake pedal, the emergency brake pedal. You didn't know that. See, this is something totally new. You take it one step at a time. It's like, how do you eat an elephant? One bite at a time. Do you buy and sell the same time? Hayes, I buy the stock, I sell the option at the same time. Alex, God bless, I'm learning every day. You're changing my life, and my family's like, woohoo! Alex, send me your number, brother. I want to hear your story. I really do. It motivates me to hear who I'm helping. Can you explain how you do same time? It's called a covered call. There's a lot of strategies. Take a look at this. Let's get rid of this. Most people think buying and selling is buying and selling. Well, yeah, it is. But when you get past the buying and selling of the stock and you go into options, take a look at this. Single, that's just buying and selling. Vertical, you're buying one option, you're selling another option. Or you're selling one option, you're buying another one. It's a vertical, okay? Wait a minute, it gets even more confusing. Then you get the back ratio, where you're buying one option and you're selling two options, all in one trade, buy, sell, sell. Okay? And then you got your calendar. Okay, that's when you buy one option way out in the future and you sell one next week. It's a calendar. So each one of these strategies has multiple layers, or they call them legs. So multiple legs. So it can be very confusing, and also could be very profitable if you know how to do it. So I always tell people, when you're starting out, find one strategy, perfect it first before you go on to a strangle, a straddle, a diagonal, a synthetic collar. Any one of those, it can be profitable if you understand them. But at least get the cash flow coming in on a safe, consistent basis before you try to learn some of this more complex stuff. So here every night I teach one strategy and only one. I got to draw the line somewhere. Okay? So I'm not asking for anything from anyone. All I'm doing is sharing information. That's it. Okay, if you want to buy a book, you want to join the club, hey, that's up to you. We all know how it works. You go to the bio, you go there, you go to the website. Yeah, I'm not trying to do that. I'm just trying to share information because I think it is a sin, it's a bad thing to take what you know with you to the next adventure. Okay, I don't think they have a stock market in heaven or hell, wherever the hell I'm going. Who knows? Whatever the next journey, whatever the next adventure is going to be for me, I find it's my calling to share. That's what I'm saying. Okay, one day someone said, you have to share what you know. Okay, fine. Well, that's what I'm doing. I'm not trying to sell anyone anything. Okay, if you want to join the course, great, join. Okay, if you want to buy a book, fine, buy it. Okay, you can do whatever you want to do, but I'm not trying to sell you anything. I'm just sharing information. I think what we have available to us now, all these all these platforms, we got Zoom over here, one YouTube channel, Twitter, one TikTok channel, another YouTube channel, another TikTok channel, and then down here we got Twitch, LinkedIn, I think one Facebook channel. I don't like Facebook. They hold the video, excuse me, they'll hold the video for 30 days, then they'll delete it. Like, why would I want to do that? YouTube will keep it forever. I got videos on YouTube from 2011. I haven't done Instagram yet. I used to do Instagram until they changed their rules. They said, you can't do it anymore. You don't have enough followers. Okay, so I have to do that one. So I got like 3 or 4 more platforms I want to get onto, but we'll get there eventually. Oh, my chair is, because I'm done for the night. I just want to answer whatever questions we have left. We're not going to look at any more stocks, but I will answer whatever questions we have on the board. Okay, Hayes, yes, I do. I buy and sell at the exact same time. What Delta? I don't use any Delta whatsoever. Happy Poya. Okay, how are you doing today? Andrea, someone tried to scam me. Oh, on that one, Andrea said someone tried to scam her. There are literally, as far as I know, 35, 36 people pretending to be me. Okay? So if you get an email, a text, a WhatsApp, a Snapchat, a Telegram, or anything saying that it's me, more than likely it ain't, because I don't do that. Now you're here, you're listening to me live, and I'm telling you exactly who I am and what I do. So if you get a communication and you think it's from me, it's not. Because I'll tell you right here, right now, if you want to have a conversation, either book a call or send me your phone number and I will give you a call. Me personally, I'm not going to pawn it off on someone else. This is my show. This is my thing. And I like listening to people. I like talking to people. How can I improve what I'm doing? How can I make it easier for you? How can I make it better? I can't do that unless people call and I talk to them. Okay. What else do we have? Oh, SOXL, BP, we'll have to take a look at it later. Trade Architect, just discovered your channel today. Can't wait to see more content. Now, I take Friday nights and Saturday nights off. Now, if you didn't know, probably a lot of you didn't, last year, I did 360 days straight. Didn't take a day off at all. Every single night, 9 p.m. until 11:30. Every single night last year. This year, I'm taking Friday night and Saturday night off, so I hope you don't mind. So next time I'll be here is Sunday night. Same time, 8:30 p.m. until 11. Are you particular to trade options with certain types of stocks like tech or real estate? My own, let me see if I can explain it to you in a manner where you should understand. Okay? I honestly don't care what the company does. Real estate, oil, tobacco, alcohol, firearms, travel, banking, don't care. My main concerns, number one, are they consistently profitable? Do they have weekly options? That's it. Okay, we checked the other day, 10,370 different companies. That's a lot. I only look at 300 because only 300 of them have been consistently profitable for more than 2 decades. So all those other ones, for you guys looking for capital growth, hey, have at it. I know where my corner of the world is right here. Simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. Holy cow, I get 15 more messages. What do we got? Open, we looked at that one yesterday. What is the best one in, wait a minute, what's the best one in options call put covered spread? There is no such thing as best, okay? Now, the reason why I say there isn't a best one, because everybody has a different goal, a different set of risk parameters, a different amount of money to play with. So what's right for me might not be right for you. Okay, what's right for him may not be right for her. We're all different. Find your own journey, find your own footing, and find what works for you. Al, thank you. What you're sharing is what I need to help myself and maybe others too in the future. Woohoo! Glad I can help, brother. Keep me posted on how you're doing. Okay, now I am on other channels too. If I got to figure this one out eventually. It's one of my newest channels, and there's no heading on it whatsoever. There's no title, so all it says is James is live, and these guys are just like, who's James? What is he doing? Now, eventually, I'll get to it because tech is not my thing. All right, so what do we have? We have 60 more messages. Holy cow, you guys won't stop. Uh-oh. Right there. Here we are, right here. I found that family is only good for taking pictures. Okay. Options means you sell covered calls. Absolutely. How much money would I need to start the covered call? Okay, Uriah. Ooh, nice name. Okay, Uriah, I suggest you start paper trading. Okay, let me show you this right here. You see this right here? One is a live account, one is a paper trading account. I still paper trade. I'm always looking at new strategies, new ideas. So paper trade first. Once you're good at it, then move to real money. And trust me, you will know when it's time to, it's like when you play Monopoly, 4 green houses, 1 red hotel, go around, collect $200 every time. Yeah, same thing, but you're doing the stock market instead. It's called a virtual account or a paper trading account. Okay, whatever broker you're using, just give them a call. Say, hey, I would like to try a virtual account or a paper trading account. Can you walk me through it? Okay. Yeah, it doesn't look like he's looking at the comments, Monkey Man. Okay, see, Monkey Man, it's like I tried to tell you earlier. I'm broadcasting on 9 different channels. So I don't care how good you are by yourself. 1, 2, 3, 4, 5, 6. Okay? Anywhere between 5,000 and 30,000. 30,000 people will come through these 9 channels. And I am terribly sorry if I don't get to yours as soon as you post your question. I'm just one person and I can only read so much. And if I'm reading everything, I'm not showing you anything. So if I'm showing you something, I'm not reading something. You can't have both. I can't do everything. What's the best one in your opinion? We already asked that question. Rashid, how are you today? Why don't you do the wheel method? Okay, here's my reason why I don't do the wheel method. Okay, there's 2 parts to the wheel method. Number 1, you sell a cash secured put against a stock. You put a big chunk of your money up and you hope the stock goes down or you hope it goes up. Well, a put option, cash secured put, is a negative connotation. You're actually hoping the stock goes down. I'm weird. I don't like negativity in my life. I stay away from the puts, okay? Because it gives me a negative vibe. I'm rooting for this company to lose. No, I don't do it. That's the only reason it is. Isn't that weird? That's the only reason it is. I'm looking for positivity in my life. Okay, you ever hear the explanation, it's a saying. I don't know what do they call that. It's a saying. Anyway, garbage in, garbage out. Well, if I put nothing but good stuff in my head, well, I'm going to be thinking good thoughts all day. So I wake up in the morning, I say, hey, it's going to be a great day. I'm going to think nothing but good stuff. Why would I want to purposely want a company to go down. So that's one reason. But still, you're taking a big chunk of your money, you're putting it aside, and you're getting a return on it. Well, I'm going to do this exact same thing with a covered call. Take a big chunk of my money, put it aside, and I get a return on it. But I'm hoping the stock goes up. It's a positive reinforcement. So I like to stay away from the negative stuff. I hope that makes sense. Yeah, I know I'm weird. You don't need to tell me. I'm what they call an acquired taste. Matt B. Dev, what's happening, Matt? RDDT. Catch me next time I'm on. All right, you need enough to purchase 100 shares of underlying stock. 86, thank you. And we looked at it earlier. Take a look at this. Where is it? No, not there. Not there. Right there. Okay, right here. Whoops, nope. Watch list. Okay, you can go to the CBOE. Look at some of these prices. $4, $5, $6, $7 per share. And then you can go the opposite direction. Look at this, $2 per share, $1.50 per share. If you can buy 100 shares at $1.50 per share, I don't know what to tell you. Okay. I would like to know the answer to this as well. Monkey Man, what was the question? But he's not reading these comments. Actually, I am. Love be whatever. Where is his question? Love, why don't you do? Yeah, I already told you why I don't do the wheel strategy. Sweet Dan, he will get to our screen here. I go from one screen to the next. I try to make it fair for everyone. Nick, wheel with selling cash secured puts is still a positive attitude if you are still looking for up. Yeah, but a put option is specifically designed if the stock goes backwards or down. That's what puts are for. You buy a put if your stock goes down, you're forcing someone to buy it at a certain price by a certain date. That's a put. Okay? And yeah, you're right. You can sell a put if the stock goes up, you get that money, it's free. But you're still tying up a certain amount of money to collect that. Well, the covered call is the same way. But I'm looking for it to go up, not looking for it to go down. But don't get me wrong, the wheel strategy is great and it does work fine if that's what you like. I personally don't like the put because it's trying to explain it to a 9-year-old wasn't the easiest thing in the world. So I said, you know what? Let's just say to the covered calls, they're simple, they're easy, and we're wanting the stock to go up. Because that's what we all want. We all want our economy to stay strong. So we want it to go up. We want it to stay strong. Okay, let's keep on going. Is he reading from multiple? Yes, I am, Matt. What's the best one option? Okay, D, you asked me like 4 or 5 times. Any thoughts on quant stocks? You actually got to give me the ticker symbol. Okay, quant stocks means absolutely nothing to me. You got to give me the ticker symbol so I can take a look at the company itself. The reason for simplicity is he likes to keep it simple. Yeah, I do. Any thoughts on Gabriel? Long. What the hell is long? See, never a good sign if I say, what the hell is this? Okay, it has no options whatsoever. So what the hell are we looking at? Okay, Gabriel. Is that L-O-N-G or L-O-N-Q? Not long. Oh. I-O-N-Q. I-O-N-Q. What the hell is that? I-O-N-Q. Oh. Interesting. I have no idea who they are. Let's go find out how profitable they are. I-O-N-Q. Let's find out. Are they profitable or are they not? All right. Oh, come on. All right, while that's waiting for that, let's go take a look at what else we have. Thanks for helping us. Official Jen, thank you. 86, covered calls on the dividend stocks for 1% goal per week. That's what we're looking for. Max. I'm still waiting for the historical prices. Nickname. How are you today? Credit spreads. Ooh, cool too. I love credit spreads. One of the fakes, James, called me. had an Indian accent. Well, I'm pretty sure that wasn't me. And here it is. Oh, imagine that. IONQ. Where is it? Where's my pen? Hold on. There are no dividends in the selected time period. So my question to you, if it has no dividends, okay, how do we find out the predictability of the movement? That's what I use the dividends for. Because most dividend stocks have a tendency to go up just before the dividend date. So if I know when the dividend date is, I can take a look at the stock at that moment in time and watch it to move up. Okay, without the dividend, I'm shooting blanks. It's like, how do we know when it's going to move? It's a fair question, don't you think? So if you knew, okay, if you knew something that allows you to see something not everybody else sees, okay, so by looking at the dividend date and buying the stock a couple of weeks before the dividend date, well, I know the dividend's coming. Well, so doesn't everybody else. But if I'm jumping in when the chart tells me to 2 to 3 weeks before the dividend, I know the dividend's coming, which means that stock is going to start going up. And by knowing that information, it puts one of the odds and probabilities in my favor. That's what I'm looking for. So if the stock doesn't have a dividend, I don't want to look at it because there's no way of telling the predictability of the movements. So people don't like the blue chip stocks because they're slow and they're boring and they don't move a lot. That's what I'm looking for. Because if I could take a stock that doesn't do anything, it just goes up and down, it's kind of like goes sideways forever. Well, that's great. I can jump in, I can jump out without any risk of losing money. Buy a covered call, buy it at $100, sell it at $100, get 1%, and then move on to the next one. It's kind of ingenious if you think about it. Marky B, echo, no idea. What's the best one? Okay, we already asked that question. Echo on your audio. Is there really? Really? All right. D, stop doing that. It's like the 5th time you've asked the exact same question. It's not going to change each time you ask the question. Sam, if I wanted to start today, what are the steps? Well, first of all, I could be more clear. Number one, like start what? If you wanted to start investing today, well, first thing you got to do is you got to open up a trading account. You got to find out where you want to put your money. Okay, Charles Schwab, International Brokers, or something like that, or E-Trade, or Webull, or Robinhood. There's so many different trading platforms. You got to find a place where you feel comfortable. Bama Redneck, holy dude, I haven't seen you in a couple weeks. How you been? Mark Delario, what's your thoughts on Robinhood? I love Robinhood, not the stock, because I actually use Robinhood, the trading platform. Okay, because that's what I use for my grandson, because he can only buy 2, 3.5 shares of this, 4.5 shares of that, 2 shares of this, because he's 5 years old. So what does he get every week? Whatever pocket change me and the other grandparents can come up with. So he comes over once in a while, like once a month or so. He'll come and he'll join me live. Some of you have seen him. He's a hot shit, but he had a short attention span. After about 15 minutes sitting here talking with all you guys, he says, "I'll be right back," and then he goes and watches cartoons. It is what it is. But Robinhood, I like the platform. I don't trade the stock. What's your, do you have a list of your favorite stocks you share? Absolutely. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and whatever Warren Buffett has on his list. Please share the list of your best 300 stocks. Yeah, that ain't going to happen. It won't work. His strategy is as it is. No dividend. Thank you. Covered call, blah, blah, blah. Uh-oh. Okay. Thoughts on UNH? UNH is interesting. It was like 650 last year. Now it's around 300. It's a 50% drop. If you like UNH, great. How do you find weekly dividend stocks? Weekend Warrior. Okay, Weekend Warrior. You ready? CBOE. Chicago Board of Options Exchange.com. That's where all the options are traded. You go to CBOE.com and you look up weekly options. Sweet Den, 1% a week is 52% a year. That's good. It's excellent. Okay. James, do you use Fidelity? No, I use this right here. This is called Thinkorswim, and it's owned by Charles Schwab. Okay, I don't get paid. I don't get any perks. I don't even get a pat. I don't even get a Christmas card. Thank you for using our platform and showing others how to use it. Okay, that guy. That's funny. I used to be that guy. Isn't that weird? That guy. Who's that guy? Okay, that's me. I was that guy for years. Okay, so I went to a class reunion, right? And they all say, hey, who's that guy she's with? That's me, that guy. And I had this girlfriend says, hey, you still dating that guy? Yep, that's me, that guy. Official J, good. How do you find? I already did that one. Excellent. Exactly. Yep. I'll take 30. I'll take 32, but 51 works for me. Easy Hider. We already looked at Intel. Thoughts on meme stocks? Yes, you actually have to give me one in particular to take a look at, because I don't look at stocks as in a conglomeration or a grouping. They're all individual. Okay, you can't go to work for everybody. You can only go to work one place. Most of us, anyway. Need to charge, man. All right, Patrick, how much money do you trade with in total? And what's the income on that? Oh, eclectic intellect. Okay, out of all 7 accounts that I have, it's got to be close to 2 or 3 mil. 1%. That's like 20 or 30,000 a week. Go figure. It's not all mine. I actually trade for other people too. Don't you have to be in a stock at a certain time to get the dividend? Absolutely. You got to buy it before the EX date. Okay, the EX date is this right here. See all those little green dots on that calendar? They represent companies. Each and every company that's on that board right there, all those little green dots, that are companies that have paid a dividend or are going to pay a dividend. That's called an EX dividend calendar. So if you want to collect the dividend, you have to buy it before the little green dot, which is the EX date. Okay, that guy, Open Door, we took a look at it yesterday. Any thoughts on OPINL? Gabriel, we'll have to take a look at it another time. I'm way past 11 o'clock. I'm trying to get to the rest of these questions before we call it a day. Don't you have to? I already did that one. What happened to Tony Hawk? It's my brother. He's in the other room. We're brothers. Yeah, me and Tony, we're twins. Why do people keep asking that? Yes, please. Okay, that guy, I'm not quite sure what you're saying yes, please, to. Okay, AV. Okay, Neo, we already looked at that earlier today. SOXL, okay, BP. SOXL is an ETF. I think it might even be a, what do you call it? Okay, Open Door. I don't know why you want to look at Open Door. Don't you know what it looks like? It's a hell no. Okay, so ask yourself a question, that guy. Okay, this stock is at 39 cents a couple of months ago. Do you see it? Do you see the chart? 39 cents a couple of months ago. How can this possibly have 20 years of increased profits if it's 39 cents a couple of months ago? So hell no to Open Door. For me, if it works for you, hey, have at it. Zoinkers. 1% weekly compound or 50% yearly. Well, if you compound 1% on an annual basis, it comes to like 74, I think 64 or 74%, something like that. But the funny thing is, I invest for 1% weekly cash flow because that pays my bills. Okay? Marky B says good night. Have a nice night. Interactive Brokers. Yep, that's a good company. Or 1500. Do you make your move before the EX date? Oh, always. What leaps do you have? I have 4 of them. Where can I find the EX dividend calendar? Google. Isn't that weird? You want to find something? Go to Google. Google EX dividend calendar. Search. There you go. All right. That's it. I've answered every single question. Yay for me. That means I be out of here. And this is where I do the little song and dance. Are you ready? And now the end is near. And so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain. I've lived a life that's full. I traveled each and every highway. Come on, and more, much more than this. I did it my way.